All right, welcome everyone. I want to share with you a quick strategy that you can use to trade that I use to give great results, and I really believe this can help you in your trading. So this is what we're going to do first of all right? Um, this is a quick strategy for especially trading futures, and we're going to use two particular indicators, and we're going to share with you those two first of all. All right. So number one, change your candlesticks. All right. You can go to the candlestick bar. It may look a little different on TradingView, but you find where you see your candlestick bars. All right. You see a candlestick indicator at the top left side here. We're in the traditional candle look right now. So what you want to do, you want to click on that drop down and you want to take it down and find the Heiken Ashi candles, all right? Heiken Ashi, all right? You change that to Heiken Ashi candles. It's going to look a little different. I like the Heiken Ashi because it's more of a cleaner look than it is with the traditional candlesticks, and it gives you a better indication of what price, volume, and action is looking like more so for your trading. All right. So we got that. And the next thing you know, I want you to add indicator. Indicator I want you to add is go to the indicators also in the menu and just type in moving average. All right. Moving average, and you will find the moving average exponential. All right. You're going to add that. Right. And then right below your your pair, all right, you're going to see a drop down. You can click on it. It's going to say EMA 9. You want to click on that and actually see the settings, right? You want to go to your settings and you want to change the length, right? And the inputs, you want to change the length to 20, right? You can keep it closed, you can keep it offset 0, SMA, everything else stays the same, all right? Now, if you want to change the style, like I like to use a little blue maybe, a light blue, make the thickness just a little bit thicker so it's good for your visual. And then we're going to stay with that. All right. Now you can see the 20 moving average, exponential moving average on your chart. Now, the next thing I want to do here at this particular time is we're going to go into the strategy and how it works. So, I start out on the 15-minute chart. All right. 15-minute chart. Now, two things I want you to identify and understand what I am looking for. All right. I'm looking for two different candles. These are my primary candles. One is we call the bullish Heikin-Ashi candle. All right, bullish Heikin-Ashi candle. Let's just take a look at what the bullish Heikin-Ashi candle looks like. All right, we're going to highlight it here. And what I really want to show you is the prime example type of candle we're looking for. All right, so it's a green candle. I'm showing it with my pointy here, my pointer. It's a green candle with a full body, no wick at the bottom, no wick at the bottom, a wick at the top. Now, notice the wick is not bigger than the body of the candle. That's the idea. You want the smaller the wick, the better. All right. No wick at the bottom. So it needs to be a green candle. This is a bullish Heikin-Ashi candle. Now, on the other side, when I'm looking for sales, I'm looking for a bearish Heikin-Ashi. What is that? That's this candle, this red candle right here. This red candle, it's a big red candle, no wick at the top. No wick at the top. It's a flat top. And then guess what? We have a wick at the bottom, but the wick is not bigger than the body. You don't want the wick to be bigger than the body or the same size. All right. This is the ideal situation where we're looking for sales. All right. So how does this strategy work? How do these Hakadashi candles play in with the 20 moving average? Let's go ahead and get to it. So this is what we're going to do. We're going to start out with a 15-minute chart. And then on the 15-minute chart, what we're going to do, let's zoom out a little bit, make sure we can see a good view of the market, right? And we can clearly see, first of all, what is the trend? The trend is going up. And you can understand what the trend is by looking at the moving average. This blue moving average, this 20 moving average gives you an idea what the trend. And what you want to do, you want to go ahead and mark your high and your low on the 15-minute chart. Now, the high is the highest point and the previous lowest point, right? So any movement, you will see the lags, the different legs, right? So from this point to this point, this is the low and this is the high of that point, right? You can see it here. This is the low and this is the high of that point, right? This is the high, and then this is the low. So right now we're looking at a buy sample because guess what? This is the current high is right here and the current low. So we're going to mark that. I'm going to use my little line tool, as you can see in the tool, the trend tool line area. I'm going to click and use the horizontal ray. Right, horizontal ray. You can see the mark. I mark it with a white line. And what I want to do, I'm gonna make this line yellow. I'm gonna change it to yellow, okay? So I can go to my settings here and change the color to yellow. I just want to make sure I mark it yellow so that you know it's on the 15-minute chart. And then my low is right here. So let me go ahead and give you a low line as well. So now when I mark this yellow low and a yellow high, this is my called trading range. This is where the market is trading in right now at the moment. So as you can see, we see a trading range and the market is going up. So that means we should be looking for buys, right? And the buys, and we're looking for Heikin-Ashi candles off of the 20 moving average. But we're going to make the trade here on the 15-minute chart. If I was doing more swing trading, long-term trading, I would, right? I would use the 1 hour and the 15-minute chart. But because I'm doing scalping for futures, it's a little bit shorter trades. I'm going to do the 15 and the 1 minute or the 5 minute. You can do 5 minute as well. But I'm going to do the 1 and the 15. So I'm going to drop down to the 1 minute chart now. After I've marked my high and my low on the 15-minute chart, identified that this is in a bullish market. I'm looking for buys, right? Now I'm going to drop down. Remember, let me see the date. This is March. This is May 1st, right? May 1st, 11 o'clock between that hour. So let me make sure when I get to let me mark it. As a matter of fact, I'm going to go back to my trend line tools. I'm going to mark it with a vertical line so that I know where I'm looking at because we did go back in time. Today is May 3rd, so the market is already ahead, but I didn't plan it like that. I'm just going and using this as an example. So let me mark that. So let me go now down to the 1 minute and get back to that vertical line, right? So let's zoom out here so we can get to that vertical line. All right. Where are we? Where are we here? All right. And so here we go. We're on that vertical line right now. So we have it. So I can zoom in a little bit because we know where our trading zone is. Now, remember, we know that on the 15-minute chart, this is a buy market, right? We're looking, this is a bear market, it's a bull market. So we're going to look for opportunities to take buys. We're going to look for opportunities to take buys here in this zone, right? We're in the 15-minute zone. So now the trend within the trend is on the 1 minute. So now you got to actually take a look at the 1 minute chart. You want to mark the high and the low of the 1 minute chart. Okay. So now we have seen what has happened on the 15-minute chart. Let's find the high and the low on the 1 minute. So now I'm going to do horizontal lines, same way as I did on the 15 minute. All right, this is a low point. So I'm gonna mark these lines white, all right, on the 1 minute chart. So I got one there, and then I got my high right here is on the yellow. So I don't really need to put another line there, okay? Because we already have it there. So now we're looking for buys now off on the 1 minute chart. So now remember, what gives us the signal based on the particular candle. We're looking for what? Heikin-Ashi candles, green candles with a flat bottom, wick at the top, off of the 20 moving average. All right, that's what we're looking for. So now I know we got this high, we pulled back, and guess what? My first signal is right here. All right, we got this candle right here. Now, I know that we're in a zone, right? We know we're in a zone. This is our zone. This is the low of the zone. This is the high of the zone. Now, we know that the market could pull back into the low of this zone. It could. It can change characters. But what I like to do, I like to look at the previous low, the previous high on the 15-minute chart, right? So I can go back to the 15-minute chart now and say, okay, what was the previous, what was the previous high on the 15-minute chart? Guess what? It was right here. So I can mark that if I want to, and I can use colors. That's what I love about this. You can use colors, right? And so I can go here and maybe mark the previous high as a green line, right? You can make it a green line. That's the money line, right? And so I like to mark these because this is an important area to come back to. The market love to come back to the previous high or the previous low, whether if you're in a sell or a buy. Right now, we're looking for a buy, so it's going to go to the previous high. So let's go back to the 1 minute now. All right. And if I go back to the 1 minute, what that gives me, guys, that gives me a point of reference. I call it a point of reference because now I know I should be looking for the market to bounce off of this area before I start taking buys. All right. So now, instead of me just taking a buy, whether the market is coming off of the 20 moving average right here or not. In my mind, I got to be thinking the market wants to probably come back to this green line before it actually goes back into a buy situation, right? Even on the 1 minute chart, I have my high and low, and it can be debatable, right? I like to say the pullbacks need to be at least 20% pullback, 25% from the previous high and low. So technically, this may not be a 20% pullback. Let me just use the Fibonacci chart just to make sure. But let me see. Yeah, it is. It's a 20, it's at least a 23% pullback. So we can leave that there, right? So this is the low and this is the high in 1 minute. Now, I have my previous high marked off in green. So I know the market wants to come back down here before it goes into a buy, right? In this area. So now we got the pullback, right? We know, yes, we got a signal here, but guess what? We still got a lot of real estate left before the market gets back down to this area. So I may not want to take a buy right away, right? We see that it gets a little choppy here, then it drops. You see it drops towards the low and it drops towards that previous high marked in the green. Now I should be looking more for my buys. And guess what? We get a Heikenaishi candle that goes up, goes across the 20 moving average. That's what we want. We want to see it push above the 20 moving average. And then that's our signal for a potential buy. And so now I can take a buy. I can ride the buy all the way up until I hit profits of what I feel satisfactory or how many pips you want to make. Or you can wait until the market finally gives you a red candle or the red candle crosses below the 20 moving average. That's just a few ways you can exit out of the strategy or get out of the trade, right? So you can either take profit, set a profit goal based on what you get on your futures trade, or you can wait until you get the first red candle, right? And then exit the trade, or you can wait until a candle actually crosses below the 20 moving average, right? And then you get a little opportunity for a trade, all right? If you want to do a 1.5 ratio, you can use the long position, right? You can click on that tool here. It says long position. And then you can go and actually click on the entry area, all right? The entry is at that candle. You can put your stop loss right above the low. That's what I usually do. I put my stop loss right below the last low. And then the ratio, the risk ratio is here. It says risk reward ratio 1.8. That's 1.8 right now. So I usually do a 1.5. All right. You can do that. All right. So now you can do this is a fourth way you can actually stay in the trade, right? You can get in, you see it pulls back, still didn't hit your stop loss, and then it goes and pushes up and hit take profit. You can do that, right? Or, right? If you don't want to use that tool, you can wait, take the trade. You see that first red candle, get out of the trade there. That would have been about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 12, 15 minutes, got out of the trade, got to pull back, and then guess what? Wait for another signal. Remember, 15-minute chart, you're looking for buys. So that means on the 1 minute chart, you need to look for buys. When the market is in a buy situation on a 1 minute chart, it's in favor with the higher time frame. So now I can take a buy based off of the Heikin-Ashi candle. Remember, we're looking for Heikin-Ashi candles. Green candles with a wick at the top, flat bottom. You get a couple of them formed right here. You can take a buy, but you want to take the one that crosses over the 20 moving average. You take that trade and you got another opportunity to ride it all the way up till you get maybe a red candle or a candle that crosses below the 20, or if you want to use the actual profit counts, right? If you get a certain amount of profits you want to get out of the trade, you can. Or if you want to use the tool, the long position tool, you can do that at this particular space right here. If you were to use the long, and remember, the stop loss is always below the last low, right? So that last low is here. So that's my stop loss. If I want to use that tool again, the long position tool, all right, this is my entry candle. After that candle closes, you get in. Stop loss is below this last low, and you want to do a what? 1 to 0.5 ratio, right? So that's the risk you take sometimes if you do that. You see it never came back right away. So now you would have to wait and see if it happens later down the road. Let's see what happens. Right. And boom, it takes you out. So that's the risk you take sometimes when you're doing the ratio game, right? So I always advise you to use the quicker method where, hey, use the 20 moving average as your protective gear. Hey, when the market, you get in the market, let it ride until it either forms a Heikin-Ashi red candle or a red candle, or wait until the market crosses back over the moving average, right? So that's just the buy example. Let's do a quick example on the sell situation. All right. All right. We're going to do a sell example here. I'm going to remove all the drawings and then we're going to find we're going to pretty much hand pick something here that we can find on the sell position, right? So let's look and see, hey, what we got here. So now let's just say, hey, we have, um, all right, we got a change of character that happened right here. So we're looking for sales after this point here. So let's say we have the market. Let's mark it on the 15-minute chart here, guys. We have a high, we had a low, high, boom, it keeps moving down. And then past this point here, this last low point right here, we have a change of character where the market has now went into a sell once it crossed over. So let me show you what we just did here, right? So we had a push. This is where we have a change of character. And it's good to understand what happens, all right? If I'm marking my charts the right way, I did the highest, the highest point is here, the current, right? And where did that start? Where did this market start? It started from, let's zoom in a little bit so we can get a clear picture. This high, it started from this point here. So this is the low. So in between this area, the yellow lines, this is the trading zone, right? So we're looking for buys. And so we're looking for opportunities to take buys. But let's pretend everything has happened and then the market started going down, going down, going down. And guess what? Because we were looking for buys, the market finally crossed below the low of that zone. So now we have to switch from thinking buys into thinking sells. And look where it happened at. It happened on this area. So now the new low is here before the pullback. Let's pretend this hasn't happened yet. And this is the new high. All right. This is the new trading zone right here. All right. So now we have the new trading zone. So let's go down to the 1 minute chart. We have the new trading zone. So now we're looking for sales. So now we're looking for sales. We know that we're looking for sales. Let's go to that area, right? Now that we know we're looking for sales, let me zoom out here so we can get to that point where we are. All right, there we go. All right, now we have a new trading zone. Now we have a new trading zone. Now, where was the previous high or the previous low? So now we go back to the 15-minute chart because we know we had the previous low and we can always, go before we go to the 1-minute chart. We probably should, chart this and say, hey, where was the previous low? Because now we're looking in sales, right? So that previous low was right here, right? It was right here. So let's go ahead and mark that. And this is what we're going to mark green, right? Remember, we're marking this in the green, right? Well, actually, it was here because this is where we had the low before. It was right here on this side. So we're going to mark this green. Remember, we had that marked already. So now that color changes to green. It used to be yellow right here, but now it's green. And this is where it crossed over. Where it crossed over at is the area that changes now from support to resistance. And now I'm looking for, even though this market is forming a new low, I'm looking for the market to pull back towards that green area. Now now we can go to the 1-minute chart and say, hey, let's go and find out when that market is going back to that area so we can take a sale. All right, so here we are. The yellow lines represents the new trading zone. All right, that's the new trading zone. The new trading zone is here. We marked it high and this is the low. The green line is the previous low. And so now the market came here. We want to see it push back up. We're back. We're in the sale. We're looking for sales, but we're looking for, once the market gets close to this area, we were looking for a Heikin Ashi candle now. Remember, Heikin Ashi candle, after it has come back to that green area, but Heikin Ashi candle needs to form and cross below the 20 moving average. That's the key. And guess where it happens at? Right here. This is our candle right here. We have a red candle, flat top, has a wick at the bottom, but it's not bigger than the body of the candle. So now this is my entry. My stop loss is above that high. We can take that trade and drive it down until we get a desired profit from the futures trade, or we can wait until we get a green candle after the push down, or more effectively, ride it out until the market crosses back over the blue line. And guess what? This just keeps going. It doesn't cross back over. So you can just keep riding this for a very long time. And then it finally crosses back over up here, down here. That is a lot of capital that could have been gained right there. But that's how you trade using this particular strategy, guys. So go back and watch this over again. Keep watching it until you can catch it and grab it. This is what I do every time I try to look at the markets. This is one of the strategies that I use for trading futures that's been very effective. So with that being said and done, wish you the best. If you have any questions, we'll connect on the sessions and then look forward to keep working with you. All right, take care. God bless.